Good morning, everybody. Hopefully, y'all are having a great Friday. We're about to start the trading day in about 30 seconds. So far, it looks like the stock market gains that we got from the job report are being slowly melted away so far this morning. Look at RSI, it's below 50, so bearish trend to start the morning. MACD is starting to head up, so that's a positive sign. But for Fridays, I generally like to start with smaller trades. And I think I'm going to do a put debit spread this morning. And my assumption is that we're going to keep going down if we continue this trend. If we stay below 50 RSI. So I'll keep RSI up, but I'm going to get rid of MACD. It's a less important indicator. So I'm just going to follow a little bit of TA, technical analysis. That'll be how I trade for today. So I'm going to do a put debit spread, assuming SPY is going to be under 379. And these are actually pretty dang cheap, surprising enough. This trade I'd probably be willing to spend about 300 on. So putting up a decent amount of risk. The problem with technical analysis is that, it's the first thing in the morning, and this could obviously reverse course very quickly. So we need to keep an eye if RSI goes above 50 and breaks out of the bearish trend so far this morning. But looking at these contracts, are pretty cheap. I might actually go smaller. Instead of putting down 300, I might just put down 200 to be safe. Again, since it is first thing in the morning. No. So it looks like we're bouncing up. I do have another trade that I have open already. So I need to keep an eye on that one too. But opening that put debit spread, it seems like we're continuing the downward price action. Hopefully I snag that. Oh yeah, I snagged it like last minute. Alright. So I just opened the 379 put debit spread. It's expiring today. So this is going to be a day trade, new options alert. P1F. Oh gosh. Just opened a new SPY put debit spread expiring today. Expiring 12/30, and I opened those at 34 each. Strike prices were 379, 380. And of course, this is a day trade since it expires today. So as long as we stay below 50 RSI, I'm just going to keep RSI up. I'm going to get rid of the MACD indicator since that's what this trade is based on so far this morning. So let me get rid of that, and then we'll make RSI a little bit bigger. And then what I like to do is set this up right here, create a little line on the chart for 50 RSI. So if we go back above that, that would mean bullish price action, but for right now we're staying below it. So we have bearish price action at the moment. All right, so we want to extend this to the left, and then actually get rid of the price and then left extension on. So looks like we're making the recovery already. So again, like I said, you can get reversals, especially in the morning, very quickly. So we could go above 50 RSI, but I do have a trade for the upside too that should be doing well. High UT, good morning. If we head on over to the Robinhood account, yeah, we definitely didn't get that put debit spread at a good price now that it's a lot cheaper. Actually, wait. So I opened a put credit spread that expires today too, and I opened this yesterday at close, I think, or near close. I opened these at 18 cents a piece. I just opened 5 of them. So didn't put on a ton of risk for that trade. And if we look at the 380, 379 put debit spread I just opened, I put them on at 34 cents a piece. Now they're going for 25. Yeah, it seems like we're reversing course already this morning, going well above that 50 RSI mark that I was looking for. But sometimes you'll get a little bit of an overreaction, especially first thing in the morning. So let's see how it shakes out. I would imagine that we're going to continue to go up after this, but hard to tell. It's definitely a candle of significance that we just formed too. Open was at 380.64, closed at 381.39. All right. Yeah, seems like we're going bullish. First thing this morning, so might get out of those put debit spreads before the markets keep rallying their way up. So I originally opened these at 34. Right now they're going for 25, 26 of the bid. All right, so $8 loss per spread. And I opened just 7 of them, so didn't put a lot of risk down. I'll close them at 25, actually. Hopefully that closes quickly. Nope. Yeah, so based on the RSI, it's above 50, holding above it for right now. So it looks like it's going to reverse course this morning, but we'll have to see how the market makers drag us today. It is a Friday, so there's going to be more market maker movements, more volatility on Fridays always. But let me post this in the premium Discord right quickly. All right. All right, where the heck is it? Desktop screenshots. All right. So, closing options alert. Premium 101. Just cut losses on the 379, 380 SPY put debit spread that expires today, 12:30 at 25 each. And again, I originally opened those at 34. Originally opened 7 at 34, so 34 minus 25, 9 times 7 of these, $63 loss. Again, Fridays I like to keep the size a lot smaller, so that way I don't get slaughtered by the volatility that you get on Fridays from the market makers and all the options that are expiring. Looks like the gap. There we go. Let's see. If we look at the daily chart, no gap on the daily. We did gap right here, so closed at 383.40-ish. Yeah, we could fill the gap all the way to 383. Certainly possible. Now that we're going back to 50 plus RSI, I kind of want to go bullish, but I do already have a bullish trade open, so I don't want to over leverage it with the put credit spread, assuming SPY is going to stay above 381, which would be bullish from where we're at right now since we're already trading at 381. So maybe we can add a little bit more size to the trade. Originally I opened 5 at 18. Now they're going for about 40 cents each. So how much do I want to risk? I'm already risking about 80 times 5. I'm already risking about 500. And I think I'd be willing to put up like, I don't know, 700. 700. Let's see. So if we're risking another 300 and 60-ish per spread, we could open another 5 of them at the current prices at 40. 5 at 40. Looks like we're going back below 50 on the RSI, so we might just whiplash right back down. Again, this is the way the market makers love to play it on Friday. Super volatile in both directions. Try to make you question your life. Yep. Back down to 380.5, so back below 50 RSI. Is it live, not public today? Let me see. I'll fix it. Well, it looks like had a little mishap on the visibility for this video, but alright, well, let's look back at this put credit spread, see what the credit is now. Is 45 each. I don't know, I'm losing confidence in the trade. It's down 140 for right now, and it looks like momentum is down. We went barely above 50 RSI, but we couldn't hold that. So I would imagine momentum's going to continue down today. So I'm going to get out of this put credit spread. Get out of the way of this momentum. It's probably in my best interest. I don't know. It's just super choppy. Super choppy this morning, both directions. What is the news that we got this morning so far? U.S. House Committee releases Trump tax returns. Non-news for the markets. FTX exchanges, non-news for the markets. China's Ukraine crisis, nothing that hasn't been talked about already. So there's not really much important news going on in the market. There hasn't been pretty much all week besides the jobs report yesterday. We are going to get some economic data dropping in about 2 minutes. Go over to the economic calendar. Chicago PMI is coming out in 1 minute. So maybe that'll switch up the market direction. I'm going to add another 5 of these at 41. We're going to take on the risk. Let's see, 40, 41. Okay. 40 credit for another 5 contracts. God dang it. I accidentally pressed close, not open those contracts. Open these contracts at 41 each, or 40, whatever they want to give it to me for. 210, so I got them for a little bit more. 2 cents more, 42 cents each. Lucky number of the universe. Let's see if the trade is lucky itself, hopefully. And post that to the, shaking out the weak hands. The market makers love to do that on Fridays. They love shaking everybody around, no matter which way, which direction you're trading. Options alert. Just added 5 more SPY 381, 380. But credit spreads expiring today, 12:30 at 42 each. So now I've got how many of these? 10 of them at 30 cents each. So 300 credit that I can make off of this. Credit's not that great. Okay. 10 open. Now at 30 credit each. Michigan, or not Michigan, Chicago PMI just came out. So let's see if, I don't think there's going to be much reaction to it, but I'm not 100% sure for it. So it came out at 44.9 versus a forecast of 40.0. So better than expected, still below 50, which is a negative sign for the Chicago economy, basically. But the previous one was 37.2, so this is a major improvement from that. So people are, the purchasing managers, this is the purchasing managers index, PMI, a survey that they do for purchasing managers over in Chicago, and they think that the economy is getting better than they did last month, and they did, and it came in better than Wall Street expectations as well. So I would say that's an improvement. Markets kind of having an undecided reaction to it so far, but again, I don't think this is going to have much weight on the market anyway. I don't expect it to, at least. Oh, Jesus Christ. QQQ. I can't. There we go. All right. So those put credit spreads are going for 50 now. Huh. Still staying above. Well, I have a 381 strike price. I might have should have lowered it to 379, 380, but we'll see if we reverse course here. We do have some support right around 380.1. Looks like we're breaking right through it at the moment. Let's zoom out. I don't know why you can't zoom out if you have a drawing over the top of it. There we go. If we look at yesterday's price action, it's kind of the reverse of what's going on. Yeah, so basically we're just melting away all of the gains that we had made yesterday. We're almost at yesterday's open. This is day trading with options. I mean, yeah, I do day trades. I do swing trades, depending on what opportunities I see in the market. Let's see. But yeah, we're coming down to that 379.65 level. I think we're going to bounce from it, but maybe people don't like the PMI report. I thought it was good, so kind of shocking that it's continuing to go down, but it's just momentum based trading this morning. If you're looking at RSI, momentum is definitely negative. So I guess we should have held that put debit spread, but let's see if we turn around here, if we keep on making our way down. Don't trade the chop. Yeah, that's exactly what happened. Chopped up and down. The best way to trade the chop is using cheap debit spreads if you can find them. So like right now, it might be worthwhile opening like a 378 put debit spread, assuming it's going to go back under the risk range. Or you could go super deep out, 377. You'd get that for real cheap too. Fridays, you want to trade the momentum. because the momentum can get really, really big in either direction very quickly. If you look at the 378 strike price, that's actually kind of expensive, honestly. You're paying 40 cents for a 378. If you do 377, you're paying 30 cents. That's actually okay. That one I'd be willing to pay like 25, but it's going for 30. Let's see the big names, see how they're performing today. Apple is headed down this morning. Tesla is slightly up, actually, surprisingly enough. But yeah, SPY is down 1% so far. Might be catching a bounce, but with the RSI being so negative, I can only imagine momentum's going to keep going. Unless market makers reverse course on the upside. Send this back above the 381 mark would be wild. Yeah, that put credit spread we opened is going for 60 now. I've already put as much risk as I want down on that trade, so I'm not going to add to. But I kind of want to snag that 377 put debit spread. It's going for 29, so it's a bit expensive. I'd rather pay like 25 for it, but I'm doubtful we can get that price. Alright, so I'm going to open 10 of the debit spreads at 377. Well, actually, let's see if we get rejected or if we go down from 379.65. Let's wait for a little bit. See, and we can actually get these cheaper now that I waited an extra 5 seconds. No, we went back above 379.65. So will we hold that level or will we flop down from it? That's the question. All right. I'm just going to pick these up at 25. That's what I wanted them for originally, so. Just open a new put debit spread. There we go. At 25 each. Assuming we're going to go down to 377. New options alert. P1F. Just opened a new SPY put debit spread. That one expires today, so it's a day trade expiring 12:30 at 25 each. Oh gosh, I can't get the dang strike prices. Okay, there we go. Alright, so got that one for the cheap. So if we do end up heading down to 378, they should be valued at around 35 to 40 cents each. I paid 25 a piece for them. So that was a put debit spread, assuming that we're going to be under 377 to the end of the day. So bought 378, sold 377. And it doesn't look like we're holding up too well. Looks like we're trying to hold 379.65, which is, I think, yesterday's open. No, it's from further back than that. see. We can get rid of this price level from yesterday since we have another candle of significance close to that level. So if we zoom back into this is a candle of significance, very large candle. 380.87 plus a close of 379.19. Divide that by 2. Get 380.03. So that's going to be a new resistance level at 380.03. Probably. The one day that I want to make money off the volatility from the market makers, that would make sense. I'm almost tempted to open a call credit spread now that we're staying below that 380 mark, but let's see if it pays okay. Call credit spread. It pays okay, actually. Wouldn't risk a lot of money on it just because we're so dang close. But so far it looks like a rejection off of it, off of that 380.03 price level. So 0.44. Yeah, I think I'll take it. I'll take it. If we fall below that 379.65 price level, then it should keep going. Oh, so it's not letting me trade this because I have similar options open with the puts. Well, that's dumb. If I go one strike price higher, I'm sure I could make that happen, but you get less credit the higher you go with the call credit spread. Yeah, that one's only paying 34. The other one I was paying like 43. So an extra $9-10 in credit that you get. Yeah, we might just trade flat in that 380 to 379 range. But luckily I'm hedged both ways, which I don't think we're going to trade flat on a day like today with it being Friday. The put credit spread that I open is currently down 200. I've got more size for the put credit spread, assuming we're going to go up, than I do for the put debit spread, assuming we're going to go down. Spent $250 on this and like $600 on this, so I guess I am more leveraged to the upside than I am to the downside. We'll see how it plays out. Right now it's just a very choppy market. So far our range is 3 to 139, down to 379.15 or so. Not sure where it got that support out of. Maybe the highs back here, I'm assuming, on the 5-minute chart. Like 379.10, 379.15. Yeah, now we're recovering back up. Interesting enough, huh? Still well below 50 RSI. So sentiment based off of that is negative. There's not really much news that's negative, though. Like the PMI, I think, was a positive report in terms of sentiment. So what weighs more, technical analysis or econ news? This isn't a very big economic news report. It doesn't have much impact since it's Chicago. If it was like regular PMI, like US based, then it might add more weight to it. But since it's just based in Chicago, it's not a like the overall perspective of the US economy. And there's really not much other news either. Like if you go to investing.com, let's see, news, most popular reports today are oil, inflation, COVID, in China, crypto. Nothing that's really major impact, I would say. So I think there's a couple things that could drive the market today. Historically, the last day of the year is bullish. But if you put it in context of the year, I feel like a lot of people would be selling their shares for tax loss harvesting to save themselves $3,000 or so on their taxes. So I think that could have some negative weight on the market. But I am still leveraged to the upside, so I've got it trading both ways with the put credit spread and then a put debit spread also. Put credit spread assumes that it'll be above 381 today, and then the put debit spread I opened assume that it's going to be below 378. So got about a $3 mark, $3 difference between what it could be. Right now it's trading at 380, so it's definitely closer to 381 than 378. But we'll see. The VIX is up today again to 22. It just loves trading around that 22 mark. Just being there forever. So annoying. Let's see. The 750 calls that I bought for January are currently down 22%. I bought how many of them? 17 at what is my average cost? 60. 17 times 60. Spend $1,000 on it. I might buy some more shares of eVixie. I've been buying $100 worth of eVixie each day, so gonna continue that dollar cost average plan. $100 worth, so 14.4 shares. Got them for an average cost of $6.94 a piece. Buy alert premium. Just bought 100 worth of eVixie. And now I have a total of 381 shares at an average cost of $7.42. All right. Back to the SPY. Really just not making much move at all. Just a lot of up and down. But at the end, we're going nowhere. Typical Friday. It's a down day, you think? Yeah, could be. Could be. Let's see. Wells Fargo earnings thoughts. I think that banks are going to have a hard time. I have a Bank of America put option open, so I am slightly biased towards bank earnings. I have a Leaps put option that I bought for Bank of America, assuming that they would go to new yearly lows. They already did reach the new, well, they haven't reached them yet, but I'm assuming banks are going to have a bad earnings report just because interest rates have gone up too quickly for the banks to take advantage, because nobody is out here buying homes or, luxury vehicles like they used to whenever interest rates were a lot lower. So that weighs negatively on the banks since their revenue is going to drop more than the earnings, the extra earnings that they're going to make from the interest rates going higher. So I think banks are going to have a bad earnings. They already are kind of priced for it, I would think. But I think that it's going to get a lot worse over the next couple of years. So if they give bad projections, Wells Fargo is actually trading pretty high based on its yearly lows. 36 versus trading at 41 right now. And their earnings is scheduled for 113, so you still have a couple more weeks for it. So you could buy like a put, and it's been up the last 1, 2, 3, 4, 5 days in a row. So odds of it coming down, going into the earnings, I would say it's pretty decent. You're going to get the implied volatility starting to rise ahead of their earnings report, so that might not be a bad idea to open. Like a long put option. With like a 3-week, 4-week expiration date for Wells Fargo. Yeah, if we go to the Wells Fargo chain, set our expiration date for after the earnings report. The 120 expiration, I'm guessing, is probably the best. And I think Wells Fargo could probably be below around 32, 31. Wait a minute. That's not Wells Fargo. We're looking at Bank of America. So I think it could probably be below 39. Right now it's trading at 41.20. So we could buy the 41 put that's going for 120 right now. So that means our break even would be 39.80 if I'm doing my math right. Yeah. Which means that you'd be making about $80 for every 120 that you spend. For 80 over 120, it's 66% return. It's not bad. Obviously, earnings are binary events, so it's hard to predict with 100% accuracy. So I'd go light on this if you do buy it. I would probably spend anywhere between $300 and $500 myself for it. But that 41 put, if banks are expected to have a bad earnings report because of the rising rates going up too quickly to make up for home values and like value of goods not dropping quick enough, then yeah, top line is going to be worse, or their revenue is going to be worse. So I think I'll actually make that. I'll do it a couple weeks ahead of time too. Wells Fargo, January 20th expiration date, and then it was the 41 put with a break even at 39.80. 1.22. Okay. Robinhood's not filling me at that price, of course. 1.23, I guess. All right, snag that one up. So implied volatility should rise ahead of the earnings report too, so that'll make this more profitable, especially if we go down with the price action. New options alert. P1F. Just opened a new Wells Fargo long put expiring 120 at 123 each. There we go. Expecting poor earnings from banks this quarter due to fast rising interest rates and slowly declining prices. This means their revenue should come down more than the extra earnings they'll make from the higher interest rates. Looks like a mean reversion pattern, pivot around 380. Let's see, SPY. Yeah, so we're back to 380, just kind of trading around that level. It's a nice round number, so the markets love to stick with round numbers, and it just kind of looks like we're trading range bound right now between that 381.39 mark and a low of 379 or so. But I think probably around 2 o'clock we'll start to pick up. That's usually when we pick up on Fridays, around 2:30 or so. All right. I hope we don't just trade flat like that all day. I'd be very shocked if we did, but we'll see. It is a slow week, so it's definitely in the cards, but given that it's a Friday, usually Fridays aren't slow. might be an even smaller range of 380.4 to 379.20. I mean, the smaller this range gets toward the downside, I feel like the more likely it is we trade to the downside later today, but we'll see. We're still below 50 on the RSI, so it's still negative there. But it is slowly kind of rising closer and closer to 50 and creating a smaller range between 45 and 40 rather than the 30 RSI we saw this morning, and right before that was 46. So lots of consolidation going on for right now, but we'll see if that breaks out in any direction, hopefully in the next 15 minutes or so. This could be a double top formation, potentially. Especially if we rise back up to around 380.5 or so, and then come back down. Or could be a higher low. This is the first low, and then the second low is higher. So if this keeps going up, that would be a start to a bullish trend, but you need to see it above 50 RSI for a real confirmation, I would say. Yeah, looks like we're testing the 380.5 level, so now we'll see if we double top or if we continue through it. Let's see, we're getting close to 380.75 now. Alright. So that put credit spread should be doing a little bit better. Now we're only down about $90 or so. That's good. Recover in that position. Yeah, I would say this is the start to bullish price action. Potentially. So let's get out of these puts while we don't have a major loss. I opened 10 of them at 25. Gonna close them at 14. Just dropped to 12. That blows. Let me try 13 actually. Lucky number 13. I doubt that will get filled there, but yeah, we're headed up very quickly now. Okay, well, I think I'm gonna have to bite the bullet and do 11. The bid just keeps on freaking dropping on me. Alright, now I can get it at 12. Hurry up and submit this order, please. Come on now. Dang it, man. Robinhood, why can't you just fill my damn order? Please. Why does it keep saying I have 0? Oh, I swear Robinhood is the slowest sometimes. What the hell is going on here? Is it filling one at a time? There we go. Alright, So we just closed that order. Took the L on it, but that's alright, because it looks like the momentum is shifting up now. Closing, whoops. Options alert, premium 101. Just cut losses on the 378, 377 SPY put debit spread at 11 each. Whoops. Originally opened at 25. 10 at 25. So 25 minus 11, 14 times 10, 140 on the loss. SPY momentum starting to shift upward with higher lows and highs and back above 50 RSI. So still got open that put credit spread, assuming that we're going to stay above 381 today. So that one is looking a little bit more likely, but it looks like we just got rejected at 381.39. We'll see if we continue through that or if we just fall right back down into a trap. That's the price level we got rejected by this morning on open. So, could form a double top too. We'll see. All right. These contracts are still going for 38. I opened them at 30 apiece. What's the chop? Just going up and down. So this morning we started up but couldn't get past the 381.39 mark, and then we headed down just below the 379.65 mark and then bounced right back up from there. So it's just trading in the choppy range, going up and down in that range between 379.15 and 381.39. But what I'm seeing so far, we got two higher lows, two higher highs, but now we're having a double top formation too. But looking at just the RSI, it's above 50, which is a positive. But we have to hold above 50. If it just trades like 45 to 55 RSI or so, then it's just going to keep chopping. Not doing much of anything. I'm almost tempted to open more of these, but I've already put on 700 in risk here. They're going for another 65 and risk a piece. I want to see us go above the double top at 381.39 before I open more potentially. Let's see. I might open like 5 more at whatever price they're willing to give it to me. Yeah, no problem. So if we go above that 381.39 mark, I'll probably open more of these, but for right now, we're staying below it, just below it. Let's go back to this. There we go. Yeah. I don't know. Hard to say. I really hope we don't just trade 45 to 55 RSI. That would be super freaking annoying. Surprised these aren't going for more, actually. Should be going for 40. Well, looks like we caught a bounce. Maybe right there. TBD, to be determined. Okay. Just waiting on some sort of confirmation here so we can open more, but not getting anything yet. Confirmation could either be staying above 50 RSI, staying above the 380.75 level, or going above the 380.39 level, 381.39 price level, but I haven't got any of that yet. Oh, looks like we just bounced off 380.75, so that could be confirmation. But we could also just flush right back through it. No, that's confirming more downside now. Unless we hold. Sometimes you'll get a dip below it and then it pops right back up, but that one... it was significantly below the price level. And I don't know if there's any other price levels it could bounce from. Maybe the open candle, 380.65. Okay. It kind of looks like we're holding it, so let me open. I guess 10 more of these. At 40 apiece. Well, let's wait. Just need some form of confirmation here. There we go. And I guess I'll take it to lower credit too. Just so I know I'm going to get filled, I'll put it in at 38. Even though I know I'm going to get ripped off. So just open 10 more of these at 40, so total of 20 of them now at 35 credit each. So 700 in credit total. Alright. New options alert. Oops. Premium 101. Just opened 10 more SPY put credit spreads expiring today. 10:30 at 40 each. Strike prices 380, 381. So now I have a total of 20 at 35 each. Total 20 now at 35 average credit. So now we can make up to 700 for this trade if everything goes right. So far we're holding up, but we'll see. We're below 50 RSI now, so that could be confirmation of more downside if it does continue that way. But yeah, we got double top at 381.39 basically. But then two lower highs, or two higher lows. So you have two conflicting patterns going against each other. Alright. Well, it's 10:32, so I guess that's the end of my hour today, and I will catch y'all tomorrow. Monday at 9:30. Hopefully this trade goes according to plan, and I'll see y'all then. Bye, everybody.